This is the New Zealand dollar on the 240. It's a live trade we just got in. This is a very nice opportunity where we've got 240 wedge pattern. We've come up for a double top. We're using a 26.18 as an entry, and on the lower time frame we have a confirmed head and shoulders with an initial structure low. When I show you this trade, this is very similar to the 157 pip winner I had 2 weeks ago on the Euro New Zealand. So let's just take it from the top. As usual, we must always do our due diligence and do our higher time frame analysis. And this looks like a bunch of junk, to be honest with you. However, when it's junk, we do sometimes start to wedge, and we do sometimes have structure coiling like this. Now there's nothing here for me on the dailies, but if we do drop down to the 240 and I redraw this out, this becomes more prominent. So we're going to want the, for me, on the closes of the candles, our trend line. So you can see double test here, double test there, and right here we have just completed a double top. Now we'll come back to that in a moment. Along the bottom we have a test, which is also a double bottom. You can see that we're clearly coiling. Now if we want to play from one side to another, what we need to do is look at this area and look for an entry reason. For me, I use entry reasons that I've tested, that I know works based on structure and works in pretty much, if not every situation, and that is a double top. So with that double top, what we're looking for is we're looking for a break below, close below. So you can see we've closed below the V point just here, and we're then looking for the market to retrace for a 26.18 trade. And if I put that on here, you can see that we have actually now come into that 61.8. So I've set a limit order. I got filled while I was out an hour ago, something like that. So it's an aggressive entry. However, if we drop to the 60, we have a head and shoulders. And the head and shoulders, if I just zoom out, I'm hoping we can see that trend line. Is it going to appear? There it is. Okay, I'll have to stay zoomed out like this so we can see it. So head and shoulders for me, I can only take when we're at structure, because a head and shoulders is a reversal pattern, and if it happens at structure, then that's an indication to me that we're going to reverse. Any other type of head and shoulders that sets up when it's not at structure can typically be trend continuation. So that's how I differentiate between the two. So we have a nice rally. We have a pullback before we hit structure. That's the left shoulder. We come up and test structure. A lot of the time with head and shoulders, we get a double-headed head and shoulders. There's the double head. And then we have a break below, close below the V point, or below the outside return, as we have done in this case. So we also have a valid head and shoulders. And you can either aggressively enter in this, or you can wait for a lower low, lower close candle. Now I've gone off the 26.18, so I've used a limit order, but look at what we did on the last hourly candle. That candle right there is an inverted hammer. This is a sign straight away that we're starting to see loss of momentum. Now it doesn't mean that we're going to turn. Your entry signal will be if we get a lower low, lower close. That will be the entry signal, and it can be anywhere in the outside return. So this is the, yeah, we're going to want this one. This is the outside return. So anywhere in that box we would be looking for a lower low, lower close, and this is an initial structure low because it violated structure. Now just some extra info here just to make this interesting. Not too sure what level you're all at for head and shoulders, but typically for head and shoulders we do not violate the left shoulder. So if I was just to put a structure level on there, I would be looking at price going no higher than this left shoulder. Now it very well could, but typically, and this is just a rule of thumb, typically we wouldn't. So if you're really looking for a very good or your best entry, wait till we get close to this trend line as we are doing now, and wait for that lower low, lower close. So for me, very nice opportunity. I've entered in based on the 26.18. So if I just bring back on the orders, I'm going to work out the reward to risk. Okay, so there we're back for the last update, and as you can see now, the FOMC has rallied up here and stopped me out. What a damn shame. What a lovely, lovely opportunity that was. Just dropped to the 60. On the 60, we spoke about this being a head and shoulders as well. There's the left shoulder. There's the head, double head. Initial structure low, pullback. 3-bar reversal. There was the inverted hammer. Doji, lower, lower, lower close for your entry. And then it was making its way down, and then news came and spiked up. That's the thing with news. It can make it spike one way or the other. It is part of trading. Nevertheless, this was a very, very good and high probability trade. But I am out for -33.